put 10 employees into perspective for us.
It's definitely a small job cut, to be clear. WeWork employs more than 12,000 people around the world. So this is just something where we happen to get some sourcing on it, and this is, you could look at it as an indication of ways in which in the next month, as they wait to try to go public again, WeWork could be showing investors ways that they're able to sort of cut back on costs. And this was basically a small unit that ran a retail concept, so it's not close to the main business that WeWork runs, but I think people are nevertheless watching everything the company does very closely right now.
Rohit, is this the type of expense tightening, belt tightening that you'd like to see from the company?
This is like a drop in a very vast ocean. As in this, as she said, like this is a company that employs 12,000 employees. Less than 10 is not going to cut it. I think what the company needs to show is a year from now, where is the cash burn going to look like? The company is burning about $200 million every month. They have a lot of lease liabilities, about a couple $1 billion that they need to pay out every year. So these are big numbers. The company needs a lot of cash. 10 employees are not going to cut it.
So is the bigger issue for you the cash burn and not the hypervaluation?
Cash burn is the bigger issue. The company has about $3 billion right now in cash, $1 billion and change in debt. They hope they can raise a lot of debt and some cash in IPO. Investors would probably need at least anywhere between 3 to 4 years of runway. You just do simple math, $200 million a year, 3 to 4 years in runway. This company needs about $10 billion in cash sitting on the balance sheet.
So Ellen, talk to me here about sort of the timing of that. I spoke with an analyst yesterday, and he says he'd really like to see WeWork hold off from raising any more money until first quarter of next year. Does that fit within your timeline of when you look at the company and talk to all the analysts, then perhaps not trying to fundraise it all for the rest of the year?
I think we're going to have to see how they approach this, because there are certain aspects of the credit facility that they're hoping to get that, as far as I understand, are limited to being available only if they do the IPO in the calendar year 2019. So there's this deadline that's sort of waiting in the current setup that they have, which is they could get this $6 billion in credit facility, but only if they do an IPO in the next calendar year, which is what they've pledged to do. So if they end up pushing the IPO into 2020, they're going to have to they're just going to have to start the process back a little bit farther, try to talk to banks again to renegotiate this opportunity to get credit.
Rohit, you're nodding. So talk to me sort of about that fundraising environment. Is it debt? Is it equity? Is it this year? You mentioned they need some cash relatively soon.
Yeah, I agree. As in, I think there is a contingency that if you raise a $3 billion cash round through the IPO, you get $6 billion in debt, and this has to happen close by end of this year. So there is a clear kind of deadline that they are working against. And they work backwards. If we were to raise $3 billion in cash, we can sell as so many shares. We can part with so and so amount of kind of ownership dilution, and they came up with a valuation. Now, it is up to the existing investors, how much dilution are they willing to accept, and for what valuation, if they need to do this careful kind of math of getting to $9 billion in cash by end of this year.
And we should note, WeWork's in a quiet period, so they're not being able to respond to a lot of these comments. So to be fair to them, we should note that. A different story, and I want to be careful not to directly relate them, was the 2 buildings in London that seem to perhaps maybe be on the ropes. Walk me through those 2 deals. Who's backing out?
So it seems like the potential buyers for these 2 buildings in London are starting to get cold feet. And again, we don't know, or we don't want to imply causality connected to the delayed IPO, but I certainly think anyone who is in a deal with WeWork right now is looking very carefully at the financials of the company, the plan for the IPO, and making some of those considerations. And so, to give a little color, one of the buildings is a WeWork Waterloo in London, and it is this big campus with a skate park and stuff. But even that, I think, is hitting a little bit of bumps along the way, and we're not really sure why.